make sure you pose that question and ask what's their track record, what's their default track record. You really want to understand all of those things before you send them any money. Hey, everybody, it's Brandon McKnight with Pine Financial Group. I am the Chief Investment Officer here, and I'm coming in today to talk to you about what to consider when investing in a private mortgage fund. I get this question a lot, and it's one of my favorite ones to answer. I'm biased, obviously, given our track record and who we are, but today I'm just going to give you some things to consider when you're going and evaluating these opportunities. So number one, I would consider the overall structure of the fund. What is it lending on? Is it residential properties? Is it commercial properties? You really want to understand what is the sweet spot for the company that you're going to go work with, and what's their overall strategy, and are they deviating from that strategy at all? I would also consider what are their loan to value ratios. One of the things you'll hear in this industry is, after repair value. That's typically most people's strategy in these funds, is they say we will only lend up to 70% of the after repair value. The idea behind that is that top number, that 70%, 80%, whatever it is, whoever you're working with, that's going to tell you their risk appetite, right? How close are they willing to go? How high are they willing to go on those loan limits? And then the lower that number is, the lower the risk. So really evaluate that. I would also ask, do they have a geographic concentration? Are they lending in certain markets? Or are they just lending wherever their opportunity lies? For us, we really focus on 4 key areas in terms of our lending. That's just because we know those areas. So you really want to understand, do they have boots on the ground? Do they understand that local market? Are they comfortable with it? How are they mitigating? How are they handling defaults, especially in those markets that they may not be familiar with? So that's something you want to consider. I would also evaluate what's their standard loan terms. How fast are those loans churning over? Are they 9-month loans, 12-month loans, 18-month? In this industry, you'll see all kinds of things, but you really want to understand that. For us, our loan terms are 9 months. That's pretty much our standard, and so that gives you a little bit of a baseline. Number 2, I would look at the returns and overall distributions of the fund. Okay, what is their preferred rate of return? What are they telling you, the investor, you're going to get? Is that going to be 7%, 10%, 12%? Those are the things you really want to evaluate. I would caution anybody, if you're hearing 10 or above, that typically indicates a little bit more risk in the fund. I would tell you that 7-8% is pretty, you're pretty safe in that. That's pretty standard in the industry. And that's because it is a little bit of a safer return. You're not pushing to generate those returns at that 11, 12%. I know as an investor, that sounds exciting, but just know that you're getting increased risk with that. Along with that, I would find out how often are they doing their distributions. Is it a monthly distribution? Are they doing it quarterly? Are they doing it annually? Those are probably your 3 most popular versions. And then also, is there any sort of profit distribution that drives those returns up? For us, we do a monthly distribution. We do that by the 5th day of the following month to make sure that we are, it's a steady cash flow. But that's something you really want to evaluate when you're looking at a mortgage fund. And then I would also ask, can you reinvest that, or does it have to be money that you receive? So do you get a compounding effect? Is that something that you can generate additional returns that way? Third thing I would consider, risk management. Okay, and I talked about this a little bit earlier, how are they mitigating risk? What happens if a loan defaults? What are they doing to get themselves out of that situation? And what is their experience doing that? And so you really need to understand, do they have, outside counsel that they handle that with? Are they taking the property back and just dispositioning it as quickly as possible? Some people are willing to take a loss on those just to get the return of capital. We typically like to work through it because our goal is to preserve capital as much as possible. And we feel like we're really well suited to do that. So I would just ask that question. And then along with, mitigating risk, are the markets are they lending in? Are those foreclosure states? Are they not, is it going to take a long time to get that property back? That's something you want to consider, because that's going to tell you that's going to drag down the fund's performance. I would also look at, are they first position liens that the mortgage fund is lending on? Are they doing first or second position liens? Those are things you really want to understand, because first position liens are the most secure. Therefore, it's your best way to get the capital back. And then, do they have a loss reserve? Are they setting money aside to make sure that the fund performs well in the event they have a run of foreclosures? Those are things you also want to ask that question. Number four, fees and liquidity. Okay, how liquid is the fund? Do you have to keep your capital with them for 6, 9, 12, 18 months? What does that look like? You really want to understand, right? Because that's going to be a way for you to protect yourself and get that capital back in the event something happens, right? And you say, okay, I need my money back. You would go to that mortgage fund and say, yep, I need to withdraw all of my funds. How quickly are they going to get that to you? I would also ask in terms of, you know, are there management fees? Is that mortgage fund taking a management fee for, managing that fund? And then how do they do that? Are they paying themselves first or are they paying investors first? Definitely really want to understand that. The way we work is we do an 8% preferred return, and then one of our funds does have a 2% management fee, but we only collect that if the fund performs over and above that 8%. So really understand, are they taking that first and then paying investors, or are they going to pay investors first? So just make sure you really get your mind around that. Number five, and this is the final one, I would just tell you, like, what's the overall experience of the fund manager? Have they been doing this for a long time? Did they just create this fund? Have they operated funds in the past? That's going to give you a little bit of sense of how well they manage these risks and how good they are at running funds like this. Funds are very popular right now. I'm seeing a lot of people create new mortgage funds. We created our first one in 2009, so we've been doing this for a long time. And so we've learned a lot over those years and make sure that we mitigate risk for investors. But make sure you pose that question and ask, what's their track record? What's their default track record? You really want to understand all of those things before you send them any money. And then the last part of that is, I would just say, how transparent are they? How often are they giving you updates? Can you call and talk to somebody on the phone, or are you just getting put into a call center where you can't get any answers? And then are they providing you information? Are they sending you performance reports? Are they doing updates to you to get you information? Those are the things you really want to look at. So, at the end of the day, guys, I think mortgage funds are a great investment, but just make sure you understand what you're getting into and do your homework and your due diligence. I also tell people, make sure it's a real brick and mortar place. You might want to check out the office. Do they actually have a place where they do business, or is this just somebody outside of their house? So I hope this is really helpful. Thank you for joining today. If you like this content, please make sure you hit the like and subscribe button. And at the end of the day, we want to work with you to help you succeed. So let us know if you have any questions. Thank you. Bye.